Hello everyone, this is the pre-market report video for today 10th August 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday early morning, China announced their consumer inflation data for the July month, and regarding that, as everyone was afraid and expected, it came as negative 0.3%, which means instead of inflation, they had a deflation. So, in simple terms, the present price of the consumer goods is less compared to the price a year ago. This, in addition to the Moody's US bank downgrade thing, which we discussed yesterday, dented the global sentiment severely and made all the Asian market negative. If required, please pause and have a look. Here, the blue curve is the Chinese Shanghai Composite Index and yellow is our Nifty. So basically, taking from the negative inflation, whole Asian market was down. Then during their lunch break, our Indian market opens flat, but quickly it lost around 80 points, and for most part of the day, it took support at 19,480 and hovers there. Then in the afternoon, all the European market opened positive after Italian government said that windfall tax on bank profits would be lesser than that everyone feared. Day before yesterday, Italian government made the announcement that they are going to place less windfall tax on all the banks that operates in Italy. This, along with Moody downgrade, actually crashed the European market, whereas on Tuesday night, American market to some extent it recovered, but Europe did not. Now that windfall tax on banks was less than the analysts expected, which in turn made the European market positive. Here, around 12:30 to 1 o'clock yesterday, when I was analyzing the Nifty and its open interest, I observed this weird thing. Nifty was down around 19,480, which means 60 to 70 points negative for the day. So it's obvious it's a negative momentum. But surprisingly, at the same time, for some reason, there were lots of new put option open interest were added in 19,500 instead of any unwinding. I hope you guys follow me. Market is down below 19,500. Then why so many put option open interest were newly added at the same place? All European market turned positive on 12 o'clock Indian Standard Time itself, and at the same time, lot of put option added at 90,500, which all good and making sense. Then why not Nifty turned positive at 12 itself? Rather than it turns direction only after 1:45 pm, why not earlier the same time as European market positive opening? This is the part where I am struggling to understand. Anyway, the important thing is Nifty turned positive, and to some extent short covering also helped. Sector-wise, metal index gained 2.3% and oil and gas index up 1%. FMCG, capital goods, healthcare all up by 0.5% each. However, realty index down 1.3% and bank Nifty down 0.2%. Overall, the advanced decline ratio was 1.3 and 8 out of 13 major sectors increased. About institutional activities, finally after 9 sessions, 3 in July and 6 in August consecutively, FII turns net buyers. Yesterday, the net bought for near 650 crore rupees, while DII net sold for near 600 crore rupees. So, in short, the story is China and US macro drags the market in the morning, but in the afternoon, European macro lifted the sentiment and with the help of short covering made Nifty to close above 90,600. Then coming to US, they were really very volatile, but I will just tell you guys the overall story. Tonight US consumer inflation for July month is due. So basically last month the inflation comes really less like 3%, which is very close to government 2% target. Based on the inflation story, all the big tech stocks, Apple, Microsoft, Google and Facebook all increased significantly based on the last month inflation. And in the last FOMC meeting, Fed President clearly stated for the next interest rate hike, they will take decision based on the present month and upcoming macro data. So this inflation number that is going to release tonight will be very crucial for taking the upcoming interest rate decision. That's why last night there was a cautiousness in the US market, which in turn causes the profit booking in all major stocks as it all down by 1 to 2%. In addition, second largest security broker in Japan called Daiwa Capital downgraded their rating on all major US chip company to buy rating from outperform. They cited weaker demand as reason. which in turn affected all the chip stocks in US. For example, Nvidia down near 5%, whereas Qualcomm down 1%, etc. All these made all three US major index to close negative. So at the end of the day, last night Dow Jones lost 0.54%, S&P 500 lost 0.68% and Nasdaq lost 1.17%. Despite all the drama, VIX didn't increase at all. It's same as day before yesterday, just below 16. Regarding oil, as per US government inventories data, their gasoline stockpile fell by over 2.7 million barrels and diesel reserve fell 1.7 million. It's obvious now that the US government is going to buy the oil and top their reserve level back to their original volume. This expectation increased the oil price by around 1.5%, which is the highest value since January 2023. About numbers, last night Brent crude oil trading near 84 US dollars per barrel and WTI crude oil trading near 87.5 US dollars per barrel. And coming to Indian areas, if required, please pause it. Again, it's very mixed. In banks, ICICI was negative whereas HDFC was positive. Similarly, Wipro was positive but Infosys was negative. Don't know why, but it's very mixed. I think it's just based on the individual stock demand. Then about GIFT Nifty, at present 3 am Indian Standard Time, it's trading near 18,623 mark, which is roughly indicating gap down opening of 30 to 40 points. So that's what happened in the global market. Now let's move to the India related info. First, today around 10 o'clock, RBI will be going to announce its interest rate decision. At present, the expectation is to keep it as same as now. In addition, market will be waiting for RBI governor's comments on economic growth and inflation outlook, especially about the effect of El Nino. My opinion, and I am suspecting he might say hawkishly because of poor monsoon and food inflation issue, but I may be wrong. There is a possibility they might be very positive as well. Anyway, because of that, all the rate sensitive sector, banking, real estate and auto will be on focus. Second, Axis Bank announced that their board approved for a capital infusion of 1,612 crore rupees in Max Life Insurance through the preferential share allotment. Here, I don't know whether it's positive for Axis Bank or to Max Life Insurance. Either way, with this capital infusion, Axis Bank's direct stake in Max Life will increase to 16.22%. Then the third, a bit of negative. Yesterday, Rogers Group of Economists predicted that for July month, India's inflation will be higher than 6%, which means it will be higher than RBI's guidance, which is not at all good. As a summary, last night US market closed negative and GIFT Nifty indicating a gap down opening, but still in ADR it's showing the trend of mixed rather than negative, so let's see. Then about the things to look out, Hero MotoCorp, LIC, Grasim Industries, Manappuram Finance, Apollo Tyres, Bajaj Electricals and Campus Activewear are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, before the market opening, Japan's PPI data is due. Then during the market hours at 10 am, as I said earlier, RBI interest rate decision. Then 1:30 pm, European Central Bank's Europe Economic Outlook report release. Finally, in the aftermarket hours in the night, US consumer inflation data. Here the expectation is 3.3% and usual weekly job insurance data shall release. Coming to technical, yesterday Nifty opened flat and corrected to 19,470 and closed at above 19,600 with a gain of 62 points. Thus, on daily chart, it forms a green medium size candle with a long lower shadow and short upper shadow, which resembles, not exactly, but resembling a bullish hammer type pattern indicating buying interest at lower levels. And also this late hour recovery might signal an emerging bullish momentum. Anyway, at present Nifty is positioned near critical resistance at 19,640 aligned with its 20-day moving average. Also the Fibonacci retracement levels 19,650 to 19,730. So for bullish scenario, if Nifty manages to close decisively above 19,650 to 19,700, then this could negate the sellers, signaling a possible rally towards 19,800 to 20,000 area. Fresh long positions and the bullish hammer candle supporting this scenario. Then for bearish scenario, if Nifty fails to break the resistance zone around 90,650 to 90,730 Fibonacci levels, it might follow a counter trend pullback, potentially targeting 19,100 from a short term perspective. Finally, there is a neutral scenario possibility as well. I mean, given the divergence in momentum and the close proximity to critical resistance, there might be consolidation in the short term if neither support nor resistance levels are decisively breached. In conclusion, the Nifty behavior for today will likely be determined by how it reacts to the critical resistance zone around 19,650 to 19,700. The technical analysis leans slightly towards the bullish side due to the recovery. Then for Bank Nifty, it closed 84 points down at 44,881 but recovered around 350 points from the day's low, forming a small bodied bearish candlestick with a long lower shadow on the daily scale. So trend wise, daily momentum indicator has a negative crossover, so a sell signal, and the market is in range bound with anticipation around the RBI policy. Thus, I expect a clear and decisive move only after the RBI policy announcement. Anyway, based on this technical analysis, here is my interpretation for today. First, pre-RBI policy scenario. For the past few weeks, Bank Nifty continuing its respect to the support level at 44,500, so it might remain range bound with movements mostly confined within 44,500 and 45,150. If it breaks below the 44,500 support level, then it might head towards 44,000, aligning with the sell signal from the daily momentum indicator. A break above 45,150 could lead to bullish momentum, but given the RBI policy anticipation and the bearish signals, this seems less likely without any significant catalyst. Second, post RBI policy scenario. Here depends on the policy announcement. A significant and sustained trending move could be triggered in either direction. If the policy is perceived as positive for the banking sector, a decisive break above 45,150 might pave the way for a more substantial rally. Conversely, if the policy is viewed negatively, a further decline towards 44,000 or below might occur. In conclusion, today the technical outlook for the Bank Nifty will likely be dominated by a mix of existing bearish technical signals and significant anticipation surrounding the RBI policy. The likely scenario is a continued struggle between buyers and sellers within the defined range, with a potential for more substantial moves depending on the RBI policy outcome. Moving on, first for Nifty, based on open interest, as I said earlier, lot of new put options added at 19,500 and the same place got the maximum put option open interest. So 19,500 is the support to look out for. Then on the other side, 19,700 got the second maximum call option open interest, followed by 19,800. So 19,700 is the first hurdle and 19,800 is the second resistance. Then for Bank Nifty, there is a huge short straddle between 44,600 and 45,000. Thus, the next maximum nearby put option open interest is at 44,000. So, 44,000 is the support to look out for, and the resistance is placed at 45,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me build the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.